Hi, everyone. It's Christine Kopr with Sotheby's Realty in Vancouver. Welcome to your June market update. We've started July. The June numbers just came out and we're going to walk through it. There's a few things that have happened since the end of June, of course. We've had a rate announcement. I've got an update on another lender, and we're going to run through those numbers as well as take a look at Q1 and Q2, so the first half of the year for the last 5 years, so we can take a look at this information and put it into some context. So let's get going. Okay, so you probably got my email just the other day. Earlier this week, the Bank of Canada raised the benchmark rate by 1%. This was a lot larger than anyone anticipated. However, once the US inflation came out, it was really high, more than they estimated. They did a rather large increase as well. Our inflation numbers came out and they're very high. So the Bank of Canada is using its only tool, which is interest rates, to try to calm down the economy, or inflation, I should say, which is then hopefully going to temper the economy. And they've increased interest rates by 1% just this week. Now, this follows these increases that we had in March. So we had a 1/4 point in March, a 1/2 point in May, another 1/2 point in June. So in total, a 1/2 point, 0.5, and the 1% is a 2.25% increase, all in the first half of this year. And here's a great graph just to show you of what's going on in our economy. Here is the inflation rate, so how fast things are getting really expensive. And here's the interest rate that's going along with that. So you can see that although we've had a large jump, what feels like a large jump, it is not high compared to the norm, or not that high. It's just a lot higher from the bottom when we were in emergency rates. Now, it didn't help that our Bank of Canada governor told everyone to go out and get mortgages and businesses to borrow money because interest rates are supposed to stay low for a very, very long time. In fact, I think they quoted until the end of 2023. But here we are, things have changed because there's a lot of things going on in the economy. I won't get into all those details, but let's get over to what else is happening. Another lender that I do a lot of work with, because as you know, we have an investment specialist background, so we deal with a lot of investors, and we always look for lenders that give you a good amount of offset from your rental income. Your prime lenders like TD, etc., they don't really give you a lot of credit towards your rental income traditionally. One of our favorite lenders is a credit union, actually, Van City, and today they have just switched their policy to giving you 75% of the rental income to qualify for mortgages on a property that you own that has some additional rental income, and they're dropping it down to 50 for properties that are standalone. Now, to put that in perspective, up until yesterday, you could get 90% of your rental income included in your debt servicing for financing purposes. So it really worked well for investors. So they've gone from 90% to 75% of the rental income if you're living in the property, and all the way down to 50% if you're not living in the property. So those are some big changes that are coming in the mortgage market. And I think I've heard of other lenders that are tightening up as well. So let's get over to the stats that we want to take a look at with you today. Okay. So as you know, I like to go through this graph each and every month because it tells you what's happening in the market right now. It's the broad trend. We need to get specific into your type of product, into your neighborhood. However, this is the overall trend of what's happening right now, and it's good for you to know. So you've heard a lot of headline news. Yes, sales month over month are down 16%. That is a large decrease month over month, but we have to put that also into perspective in terms of overall sales that have been happening throughout the year and what that's looked like on a historical basis, which we're going to look at. So let's just run through June and then we're going to go from there. So we've got sales of 2,444, down from the 2,900 we had in May. New listings, we actually had less listings come on the market, 5256. In May, we had 6,377 New listings come on in the month of May. This month in June is less. Now our inventory, so how many homes are available for sale right now in all of the great real estate board of Greater Vancouver. So we've gone from 10,000 to 10,045. So it's a 4% increase. So we had a decrease in new listings coming on and a 4% increase in inventory. The number that we love to look at is months of inventory because it is a clear sign of supply and demand. We are sitting at 4.3 months of inventory. Traditionally, between 4 and 6 months of inventory is considered a balanced market. Below 4 months of inventory, so not a lot of inventory for the demand at that time, is considered a seller's market, and over 6 months of inventory is considered a buyer's market. You can see we've been in a strong seller's market all year because we're below that 4 months of inventory. And as a consequence, you can see the benchmark price has been steadily increasing every month, except for now we're in our second consecutive month of price decrease. And we've had a 2.1% decrease month over month for the benchmark price. So let's put this all into context because it could sound like the sky is falling. However, we've got to put this whole thing into perspective. And so next up, I'm going to share some historical information for you. So this graph here is to give you an idea of what's happening for sales. Sales of this is going from June of this year back to July of last year. So you don't see the first half of June last year of 2021, which was the strongest, highest selling year on record ever. So we really need to put these numbers into perspective. The second half of the year, all the sales being in the 3,000s is actually very elevated in terms of sales. We usually sell between 2,000 and 3,000 a month. Anything above 3,000 starts to become really a hot market. And as you can see, as we got into the first half of this year, the peak here in February and March was just totally incredible, highest selling month on record. And since then, we've had some of these increases come in. So March was the first quarter point, May was a half point, June was a half point, okay? But you can see that what we were comparing to earlier this year is obviously we're going to be down from that because it was extremely high. Now, to put it into perspective for the last 5 years, we're going to start off in 2018, which was actually kind of a okay year. We came off of some really hot years and the sales were about 25,000, same with 2019. But we're going to follow this yellow line throughout the year. And you can see that, you know, we hit a peak of 2,900 in March of that year. Now, this is when the stress test was introduced in 2018, and you still had elevated sales in the first half of the year, and then they started to trend down a little bit, okay, down to about 1,000. Then we started off 2019, and things weren't awesome in the beginning, but they started to pick up, and then they started to normalize in here, and you can see that right in this trend. And again, you can see that the sales here, this is really where they hang, is in that 2,000 to 3,000 a month. And so 2019, here we go. Then we roll into 2020. So this is the beginning. This is COVID. You can see the COVID scare and then emergency rates. People got used to COVID and sales started to really, really pick up. And they were quite substantial, being that most of what happened transacted was in the high 3,000s. And then we started into 2021, and this is where you get into the highest sales of all time. You can see that 2021 is just way outlier. So the sales, we're just not doing these kinds of sales. We're coming back into a more regular market in terms of the amount of sales. So it's great to see, you know, it's good to put that into perspective when you're wondering about where the market is going. And here is the first half of the year for 2018, 2019, 2020, 2021, and 2022. So you can see this is more of a normal market. This is probably where we're going to be heading to in the coming months. And this is where we've been. We've just been in a very elevated market. So this is what we're talking about when things are shifting. Price point here. So this is July 2021 to 2022. So here we are. You can see from July of last year all the way up to here in February, March was the peak of the market. We've come down since, but you can see that pricing is still higher than it was from the benchmark price perspective year over year. So we're still ahead of the game in terms of overall pricing. And putting it into perspective, you can see that where we're sitting right now, this is 2022, the pricing here is just way elevated. I mean, we had massive price gains over the last little while. You can see where prices were starting at 2018. 2019 was kind of the bottom of the last run, going into 2020, and then coming into 2021. It was just a massive spread in terms of pricing, and that went on even more coming into 2022. So there you have it. You can see that where we've been was quite unsustainable. As we all know, things are going to normalize, and we're going to keep a look at what's happening as things progress in the market. Today in July 15th, today we're at 900 sales for the month. So it looks like if we continue on at that pace and we complete the month, we could be sitting around 1,800 sales for the month of July. So a little bit quieter, now not unnormal going into the summer. Our interest rates and lending practices having an impact, you bet. So is summertime. So we're going to see how things are going moving forward, but it's definitely an opportunity for those of you that are out there with some good rate holds. And if you're thinking about selling, then it's worthwhile having a conversation sooner than later. Thanks so much for your time. I'm Christine Kopr, Senior VP of Sales with Sotheby's Realty. I look forward to connecting with you soon.